Does that mean that on a 1 crore plan, you only get 96.23 lakh? It's often the top most recommended option for NRIs because of its specialized, there is no single winner. Anybody who says otherwise is trying to sell you something. Now, over the last 2 months, you guys have seen me travel throughout the UK. And so many of you have been like, bhai, I'm moving abroad next year. Now, whether it be a tech job, a master's degree, or whatever, right? Everybody follows the same checklist. It's visa, flights, housing, and a forex card. But there's one thing that nobody really puts on the list, and it's the one thing that protects everything else on that list. It protects your parents, it protects your home loan, it protects your family back in India. And this thing is a term insurance. Specifically, the term insurance when you're an NRI. So let's break that down today. There are over 15.8 million Indian NRIs today. And that's a number from the Ministry of External Affairs. And a huge chunk share the same exact financial state, earning in dollars or pounds or some other foreign currency and bringing some of that money back in India. Parents in India, maybe any EMI back in India, maybe planning to return someday. So if your life is split between two countries, where should your term insurance be? For most people in this situation, the answer is India. And there are 3 reasons primarily for that. Number 1 reason is the cost. Indian plans are significantly cheaper than a UK or a US alternative. And the best part, the premium is locked in INR for the entire term of the plan. The second most important point is that your beneficiaries are present in India. If something happens to you, your nominee, whether that be your parents or your spouse, will be in India dealing with an Indian insurer. And the payout will land in an Indian bank account. So no navigating the maze of international claims for your nominees at possibly the worst time in their life. Now, the third big important reason is that the policy travels with you. That gives you global coverage. Whether the death happens in India or abroad, the payout happens here. And by the way, it stays valid even if you get a green card or a citizenship for a foreign country. As long as your disclosures are clean, that term plan will stay valid. Okay, so the product makes sense. The hardest part is choosing the right one. Because in India, with insurance comes a lot of noise. That's why I personally recommend Ditto Insurance for giving me spam-free and honest advice. Ditto is a Zerodha-backed company that acts as your personal insurance guide. And the best part about them is the consultation, the calls, and the claim support, which is 100% free for you. Plus, if your claim ever gets denied, Ditto fights on your behalf to get that claim approved and gives you 24/7 claim support. Unlike other insurance agents, they will never spam call you. And you can buy the policy at your own convenience. So be tension free and make that consultation call right now. And this is something that I have used personally as well to finalize the right insurance for me and my family using Ditto's website and getting on a call with one of their agents. So I highly recommend it. So if you want the same experience, do go check out the link in my description and book a free consultation call with them right now. Now, a quick disclaimer before we move on. I am not a financial advisor. This video is purely educational, and everything in the video is sourced from verified sources throughout the internet, and every source will be listed down in the description of the video. Now, every insurance ad throws one number at you, that claim settlement ratio. We settle 99% of the claims, they say. And technically, everybody is telling the truth. Now, here's what they don't tell you. There are 2 ways to measure it. The number 1 is by count, is simply the percentage of claims that got settled. And the second is by amount, is the percentage of the claimed amount that got settled. Now, IRDAI's own settlement report for the year 24 to 25 says the industry settled 97.82% of the individual death claim rates by count. But by amount, the number is slightly different. It's 96.29%. Now, a common misconception. Does that mean that on a 1 crore plan, you only get 96.23 lakhs? Absolutely not. Term insurance is binary. Either they pay you the full amount or they don't pay you anything at all. Instead, this ratio tells you that how often does an insurer dispute large amount claims versus smaller claims. And the percentage of claims that the insurer refuse, by count, it's just 1%. But by amount, it's around 2.74%, nearly 3 times higher. So in plain English, bigger claims face more scrutiny. And if you are an NRI buying a 2 crore, 5 crore or a 10 crore plan, then you are the big claim. So this one distinction is one very important thing throughout the video. Now with that lens, let's look at the 4 most talked about insurance plans in every serious NRI conversation. Now all 4 insurers report count-wise ratios above 99%. One caveat, this is an average from the last 3 years, and the source of this information will again be linked in the description down below. Okay, so the number one plan is the HDFC Life Click to Protect Supreme Plus plan. Now with the CSR of 99.66% and over 2000 crores paid last year, the standout feature is life stage benefit. That means you can increase your coverage after marriage, after kids, let's say if you get a home loan, without fresh medicals, which is a genuinely useful feature if you're somebody in their early 20s and you know that these things are going to happen in the next few years. Now the trade-off is that this one is the most priciest of all the four options we're going to be looking at today. The premium lands to be around 27,000 for the profile that we're going to be comparing all these four plans on, and also compared to the other plans, this one has a minimum income of 15 lakhs compared to the 10 lakhs in the other plans. Now the second plan is the Axis Max Life Smart Term Plan Plus. This has a CSR of 99.71%, which is the sixth time in a row that this plan has about 99% coverage. The Smart Cover variant gives a 1.5x times the coverage for the first 15 years of the plan, plus an instant 2 lakh advance when a claim is filed. The premium around 23,000 in a year. Now the third plan is the Bajaj Life eTouch 2. First, the name. This is the company you knew earlier as Bajaj Allianz. Now Allianz exited in January 2026. It's just Bajaj Life now. So same insurer, just a new name. Now this is the cheapest option out of all three. The premium sitting at around 22,000 annually, but the gap widens as the cover increases. And the CSR is around 99.32%. Looks great, right? In fact, it's often the top most recommended option for NRIs because of its specialized medical treatment options even abroad, and the fact that they reimburse medical costs incurred abroad. Now, independent analysts that track amount-wise settlements have flagged a gap here. For Bajaj, the amount-wise settlement ratio stands at around 93.42%. While this is slightly lower than some of its peers, it remains comfortably above the 90% mark that the analysts are looking out for. It definitely is not a disqualifier. But if you're someone who's buying a 5 crore cover, then this is the sort of nuance that you should definitely keep in mind and discuss with your advisor when you're looking out for a cover. Now the fourth plan is the ICICI Prudential iProtect Smart Plus. This one is not in Ditto's article, but it appears up in almost every independent NRI comparison. But even before we start talking about the plan itself, a very important caveat to consider is that this plan needs you to be physically present in India for 2 weeks and get the medicals done here. Now analysts place ICICI near the top when it comes to amount-wise settlement ratio as well. Signature features include payout as lump sum or a monthly income, and a smart exit option that returns all of your premiums if you outlive the need. Now the quotes start around 15,000 rupees, but that's for a very specific 1 crore plan with a person that has a UK profile. So your premium will depend on your age, your health, and the countries that you're looking to cover from. And just for comparison, if you want a like-to-like comparison between that plan and that plan for a 30-year-old for a 2 crore cover and spanning from his age to from 30 to 70, that premium comes out to be around 21,000 rupees. So as you can see, there is no single winner. Anybody who says otherwise is trying to sell you something. And that amount-wise question, that applies to every insurer. It's exactly the kind of question you should put to an insurer before buying their plan, which is genuinely what those free Ditto calls are for. Now for the next section, I also want to briefly talk about the cost of waiting too much. As you saw before, the same 2 crore policy cover for a 25 years old was 17,000 rupees compared to 21,000 rupees for a person aged 30. And guess what? It becomes 28,000 at age 35. And whatever age you lock in, the premium stays flat across the entire duration of the plan. So the biggest premium hack that anybody can ever tell you is just buy it when you're young. Also, if your budget allows, buy more cover than you need, because accounting for inflation and future goals is a very smart move you can make. And it's not like if you're doubling your cover, your premium will double. Plus, by locking it in now, you avoid the need to reassess it later when you're older and potentially facing some health conditions that will make the insurer not give you a very ideal premium. Okay, before we close this video, I've got some quick NRI practicals and terms that I want to explain to you. First thing, very simple, how do you pay for these insurances? Simple. Your NRE, NRO, and even your FCNR accounts are eligible for it. Plus your international cards. And some insurers even take money now from UPI through your Indian bank account. Now, second is the documents you'll need to get these policies in place. Now, these are your passports, visa or work permit, your overseas address proof, income proof, FATCA declarations, and medicals often happen through over video calls or when you're visiting India. The third thing is the tax. Now, premiums qualify under ATC for up to 1.5 lakh of exemptions, but this is under the old regime only. Important point, the death benefit in India is completely tax-free under section 10D, but your resident country may tax differently, so please check that. Fourth point is the claims. Everything settles in India. So your nominee will deal with the Indian branch. The payment will happen to your Indian bank account under RBI and FEMA rules. Now, lastly, a very, very important point and warning is disclose everything. Whether it be your NRI status, your occupation, whether you smoke or not, your health in every detail possible. Because remember that 2.74% of repudiation rate, these disputes are almost always about non-disclosure. So a clean application is your family's real insurance. So to conclude, 3 things to remember. Buy it in India if your dependents are in India. Second, buy it young. The premium locks in the moment you buy it. And third, when somebody quotes that 99% settlement ratio, please ask the question, by amount or by count. And if you want an expert on your specific situation, book a call from the link in the description. Free IRDAI certified advisors, no spam. Link is in the description and in the pinned comment. If this helped, subscribe to the channel and see you in the next one.